Hey guys, it's Bitcoin Schmitcoin, and I'm here with the first installation of what is hopefully going to be the new bi-weekly, maybe 3 times a week video series for Bitcoin Magazine. Rather than writing articles, starting to test out some video analysis for the markets, and hopefully that'll be a little bit more digestible, a little bit easier to get a visual representation with a little bit of narration as well. Feel free to comment on the video, either on Twitter or by email or by carrier pigeon or smoke signal. And let us know if you like the video series or you like, or if you'd like some format changes, or maybe you like the articles and you want those instead too. So yeah, any feedback is welcome. And hopefully this will be the first of many. So let's go ahead and get right into it. So unless you've been living in a cave for the past 12 hours, 24 hours, I don't think it needs to be said, but Bitcoin had a massive breakout, right? So let's go ahead and talk about what caused the breakout, where this breakout is going, what hurdles we have to overcome, and what this means for the macro health of not only the Bitcoin market, but the crypto market as a whole. So first and foremost, the market broke out of a large consolidation pattern known as an Adam and Eve double bottom. Let's go ahead and talk about that. So if we look at these dips, we see we have dip 1 and dip 2 here. And this forms the consolidation pattern known as an Adam and Eve double bottom, where this is the so-called Adam and this is the Eve. And together they have a neckline, which is this horizontal right here. Boom. Right? This is the neckline of the Adam and Eve double bottom. The Adam and Eve double bottom is a nice classic charting consolidation and bottom reversal pattern. It has a very clean projected price move, and it's calculated as follows. So you just basically take the neckline here and you project it down to the tip of the Adam bottom, and we see we have an $1,100 move, and we just project it upward. It's very simple, very nice. So we take this neckline and we're going to project upward $1,100, and this would be our ultimate measured move, right? So we can expect a move to the 5,300. That's the target. Doesn't mean that we're going to go there, and it also doesn't mean that if we do go there that we're going to stop there. But that is the typical way you measure a breakout of this consolidation pattern. So we still do, we're like halfway there. We wicked up about 2/3 of the way, but currently we're sitting right at this resistance band, and I'll go ahead and talk about where this resistance band is derived from. So you can see here we have this very huge tail following a 20% move last night, 22.6 if you want to get technical about it. But on the tail end of this move, we see this giant wick, which isn't entirely surprising because whenever we see large moves like this, a lot of people are eager to short. People are taking profits on their longs, and it just combines a bit of a selling effort on the top, but it's nothing to be discouraged about. This resistance level comes from our monthly candles. We can see here it's one of the few red candles in our last bull run, but it does create a nice little resistance band, and we're currently sitting right at the top of it, where one might expect to take a little breather on the daily time frame. Now, what caused this violent move? This was, if I'm not mistaken, one of the largest moves percentage-wise that we've seen in years, a very long time. And when we look at what caused this breakout, it becomes pretty clear that there were, as I've been talking about with my articles for the past month and a half, I guess, we've attempted to break through this resistance level 3 times, 1, 2, 3, and now on our 4th attempt, we see this nice change of character with the market structure. This change of character followed finding support on this blue zone here, And it also found support on this black zone that we can see here. Every time the market moved into this level, it got rejected, and it got rejected violently. We see large rejections here. And so what does that mean? That means that in this red zone is a large amount of stop market orders. So what is a stop market order? It's basically, if you're going to go short, you put a protective order on the market so that if the market moves into a level, you immediately get out of the position, but it causes a market order to hit the market, which means that the price gets pushed up ever so slightly. And if you have enough people that shorted these levels, you get these resistance levels. But if once the resistance levels are popped, well, then the market flies. So we get these levels that, I'm just going to give you some hypothetical levels here. Say we've got stop orders here, we've got stop orders here, and stop orders here. Well, if the market pops this level, what happens? All the people that had stop market orders there pushes the market up to this level. And then everyone who is here pops the market up to this level until it cascades on and on and on until you get this this big wick, this giant candle. And that's not only the effort of the bulls, but it is assisted by the capitulating bears. So where does that lead us in terms of market structure? Immediately, the bearish market structure that we've seen for the past 4 or 5 months, basically since November, we have very clearly broken out of this level, which is great. We broke out of it not only on widespread, which is the wick-to-wick candle, but high volume as well, very high volume. And we still have several hours until the daily closes, so unless all hell breaks loose, this candle's obviously going to close green, and it's going to close on huge volume as well. If we look at the macro trend of the market, we get this really nice trend line here where it's been respected time and time again, and now we find ourselves, and now the market finds itself testing it in conjunction with a test of the monthly resistance band, and so things are going to get interesting here. At the moment, it's holding its own, and if we look at the hourly time frame, even these low time frames, they're respecting this trend line. So it's a very interesting point for the market structure. And if we hold this level, it's too early to say bear market over, but this is the type of behavior we want to see toward the tail end of a bear market. We want to see large buying interest. We want to see a break of these milestones like descending trend lines, macro resistance, and we want to see diminishing supply, and that's what we saw here. This upward drift was pure diminished supply. They bears kept trying to push it out, and ultimately the bulls won and popped this level here. Now this move still is fresh. It's not out of the question that we could see a retest of these lows. Well, I guess they're lows now, but retest of these levels here, because we did fly right past them. But given the amount of buying interest, it also would not surprise me if we don't test those levels. So the best thing the bulls could ask for is a nice sideways consolidation like we're seeing here. And if we manage to find support on this this monthly resistance zone and find support on this trend line here, that is a great sign of things to come. Now, keep in mind, I did mention that we haven't quite realized our ultimate price projection for this Adam and Eve double bottom. It is an $1,100 move. We do have a little band of resistance here, but for the most part, the market is like in free floating no man's land here. We see that there's just nothing in here to really hold down market. There's this little area, so it does seem likely, not only with the confluence of the breakout of the Adam and Eve double bottom, but it does seem like we're gonna attract some buying interest toward this zone here. And of course, like I was saying, that would represent a break of the downtrend. For now, try not to get too greedy because we did just move up 20% in an hour and a half, right? So like I said, we very easily could come back down to test these levels, maybe even test the breakout if things get really hairy. But yeah, we came into this level very violently, and we got spat out very violently after months of consolidation. So it would not surprise me to see us cruise all the way up to this 6K level that we broke. We just got to play it by ear. For now, things are looking bullish, and not a whole lot of bearish arguments to be made right now. But I'll be updating you guys later on in the week. Again, feel free to let us know. If you love the videos, you hate the videos, if you like things clarified, any sort of information like that would be greatly appreciated. Again, it's Bitcoin Schmitcoin, and I'll see you later on in the week.